Hello, welcome to my next episode of War in the Markets. This is the 12th of May. I'm recording it at late night. You'll probably get it in your desk early morning of the 13th. Obviously, a bad day for the markets with across the board selling and every sector being in the red today. What was the cause of it? Well, the continuing geopolitical tensions obviously played a part with oil strengthening further to 107 and the resultant pressure on the rupee taking it past the 95 levels. In fact, it closed as high as 95.63. And in fact, the forward premium have also expanded to 378 swap points, which means you're taking the rupee for a 1 year forward down to 99.8 levels. So who knows, 1 year later it could touch 100 is what the market is saying. So this bad news was obviously overhang on the market, but what caused the market's correction was not that. It was a very different reason, which all of you are aware of. It was the Prime Minister's address to the nation, where he exhorted people to stop buying gold, to reduce their consumption of petrol and diesel, to stop going abroad, and a lot of stuff. So this caused a very nervous market to panic. But it's a very nuanced panic, and I will first read out the factual data for today. So the Nifty was down, I think, about 1.83% on the back of a fall yesterday. The mid cap index was down 2.5%. The small cap index was down 3%, and the micro cap index was also down 3%. So clearly today was an off day in terms of the fact that the trend we've been seeing has been that generally the broader market has been doing better than the large cap market. Today was the worst. Today was the reverse, right? And clearly then what was at play? Well, retail was at play. So let me explain the advanced decline ratio. Only 417 stocks advanced today, but 2,570 stocks declined. So advanced decline ratio was heavily in favor of the declines. So combine these two together, you can see that broad-based selling was in the market, and that's why I said that today was different. Because when you look at the flow data, everybody, if you ask them, and I saw a lot of tweets and a lot of messaging on social media, oh, today FIs would have been selling heavily. That's why the market has corrected so deeply. Sad, but not true. Because FIs only sold 2,000 crores, a little less than 2,000 crores today compared to the 8,000 crores they sold yesterday. So they were not the cause of the fall. Then who was the call? Did DIIs back off? No. DIIs bought 8,000 crores today. So then who has caused the fall? Well, the answer is staring you in the face. It's the individual investors in India, whether they be retail or HNI, whether they be trading related mentality people or investment mentality people. They were the ones who sold today. Maybe the short-term traders, we know the mid and small cap had rallied a lot in the last month, so maybe they were booking profits, so more happiness to them. But some others would have panicked based on Prime Minister Modi's speech and have been selling it out in the market, and they might have been incurring losses. So it's clearly the individual trader who has caused the market to correct so badly today. And the selling has been across the board. I said the least fall was in the metals pack and the energy, oil and gas pack, and that's also just 0.4%. And the reason for the energy oil and gas pack, you know, right? Obviously, the refiners got hammered today because of what Mr. Modi said, and the royalty-related positive for ONGC and Oil India saw their shares rise. So, is this panic at what Mr. Modi said right or wrong? Well, that's a stage for another day's discussion where I'll discuss that in detail. Today, let me not get cluttered, but it is clear that the individual investors are panicked. But I just want to point out one thing here, that the FIIs have not taken Mr. Modi's statement at any value. That's why from 8,000 crores selling yesterday, they are down only 2,000 crores selling. Right? So the key issue here is just that individual investors were in a kind of a cuckoo land. That's why the mid and small caps have been rallying despite the fact that the price of oil has gone up by 50% for India. And to assume that there will be no impact on our economy and everything is hunky-dory just because the government did not touch the retail prices of petrol and diesel, they all thought that this war is not so impacting us. And then whatever little bit of the earnings season came in, because expectations were low, a lot of earnings beat consensus, and there was a mad rush to go and buy those stocks and those sectors from which the stocks posted very positive results. Today was a reversal of that because they panicked, right? They now felt that what Mr. Modi said is a harbinger that he's going to raise petrol prices. Maybe they thought that he's probably going to bring in gold import duties, and they thought that maybe he's going to do something on the foreign currency front, like the LRS scheme, which is $250,000. Maybe they're going to curb it. But all of these are just rumors. This is Mr. Modi is just bringing to light. Now there could be questions saying, why is it so late? Well, there are answers to that, because initially the war was not expected to last this long, given the heavyweight of Israel and America fighting a single country, Iran. But Iran's strength has surprised everybody. The fact that Iran expanded the war to the rest of the Gulf was an unexpected event. And the fact that the Hormuz Strait, they were able to maintain a tight clutch of the Hormuz Strait, and rise in oil prices obviously benefits Iran, and they're also wanting to charge some fees there. So the staying power of Iran has surprised everybody. And probably from the Indian government perspective also, they would have thought this will be a short, quick war, and we have enough resources at our end to tide it over. But the war has belied us all, and today it comes to a situation. I know there is a group of people who are saying that the government delayed even what Mr. Modi spoke yesterday for the assembly elections. That's fair enough. It's a political decision, and that's fine. But it does not naturally mean that just because he's stating these exhaustions to the people of India, that immediately there's going to be a right. In fact, the noises from the government are that there is no such hike planned. But if you ask me, from a fiscal situation, the government has one of three choices. That is, either you allow the fiscal deficit to worsen this year and hope that the rating agencies will understand, like they allowed us in the COVID year. This is also a special year. Take that leeway, then they can absorb a lot of the hit on their balance sheet and receipts and payments account, right? Second is to let the oil marketing companies carry the loss burden for some time. And third is to do a gradual small hike to the people. We don't know which way it's going to go, but whatever said and done, right? The key point here that we all have to remember is that Mr. Modi is trying to sensitize the people to the severe impact of the war. That's it. Take that as it is. And why I say this is that this was already known. It's not that Mr. Modi has to come and tell us that our economy is under severe stress because of this crisis. It is. But it's a short term, matter of time after the war. Maybe it will take a long time for oil to come back to a very low price. That's so be it. But we'll adjust it and absorb it. And so in passing today, obviously I cannot predict anything for tomorrow, because FIS shorts positions continues to be in a very adverse situation. They're heavily still short on India, both from the index futures part as well as on the put call ratio on the options side. So it's unpredictable, the market. But the good point is, what I tell you is that if you were really accumulating every day, today was a very good day for accumulation. Second, over the last 2 days when the market is corrected, DIIs and DMFs are a big part of that, have bought 14,000 crores worth of stocks in a falling market. So if you have been investing in mutual funds and your fund manager has been buying yesterday and today, he's got a lot of stocks cheaper than they were a few days ago or a few months ago. So it's good for your portfolio. So like I reiterate, right, this panic is again an overreaction to the Prime Minister's statement. The reality of the situation hasn't changed, and I believe that when the war ends, a lot of this uncertainty will go away, and then in a few weeks from then, oil and everything will start stabilizing and things will come back to normal. So as a medium-term retail investor, no change in your strategy. Gradual, gentle accumulation of a diversified portfolio, ideally through mutual funds, right? Thank you. Look forward tomorrow.